Hey everybody, how you doing? Bruce here, Stock Markets with Bruce. Welcome to Sunday. You like the sunshine on me there? I just noticed that there's a timeout. Watch this. I'll be right with you. Check this out. What do you think? Just noticed that
fantastic.
Timeout. Watch. Put that on mute. There we go. Okay, hang on. Welcome to the Sunday show. Surprise hangout with yours truly. With all of the sunshine that Creston can deliver. There we go. All right. Would you like to do a getaway like that, or would you like to be on a getaway like this? Let me ask you, man, if you had a choice, would this be your idea? When we can go traveling again, is this what you want to be doing? Because boy, I miss both of it. I miss all of it. I miss the action of New York and the big city fun, and I also miss that that beach getaway. Boy, would I like to be on a cruise ship right now and then walking a beach here and there. I would really love that. Welcome, guys, to Stock Markets with Bruce, Sunday, February the 7th, surprise live show at 11:15 in the morning. I think today this will be a little more of an intimate crowd. I don't think there'll be 20,000 people joining us, but there are 200 of you here, and welcome aboard. I figured I would do a Q&A today, just covering, what's going on. And if you have any questions about what's coming up this week or what happened last week or just the markets in general, I figured why not spend some time with you today? The big game is coming on later today. We're all going to be inundated with that. And I figured, well, why not say hi? I see MG Toe is already here. How you doing, man? Cam Kurt, can't believe it's blown over so fast. Let's see here, Cam. I was thinking the same thing. Was happening. Listening to Bruce changed my mind. It was a P and D. I don't know if it was a pump and dump. I don't know about that. Bought one share, 275, smallest dip. Didn't lose a ton of money, but I got tricked by Bruce's upbeat energy. Well, I've been saying all along, I don't own any of these stocks. I'm a commentator. And if you're going to buy Gamestop or anything in the markets and you're a small investor, cash only, and only money you can afford to lose, because you just don't know of these things. Although I'm personally, I like the direction GameStop is going. I've mentioned that a million times. And Friday, it did have a bit of an uptick day. Is that the beginning of a recovery right away? Or are we going to test the lows again? I think we're going to test lows, but maybe we're building a base in this 40-60 neighborhood, and we're taking a few pops. It did pop to 95 on Friday briefly, but it'll be interesting to see in the next few days just how the shares begin to react again, because I think the shares of GameStop, the shareholders of GameStop, are probably all cash buyers as far as the retail investors are concerned. There's the hedge funds that have unbelievable leverage, but they've got much stronger hands to handle swings, and we'll see what's going on. Anyway, we will follow, of course, that. And Nami, hi Nami. Hopefully you can talk about Virgin Group Acquisition Corporation. There's been a lot of criticism about the 23andMe business model. Excuse me, business model. We'll get into that. We'll talk about that deal a little bit more. What else have we got going here? People talking about DNA tests, whether they're a good thing or not. It all depends on, I guess, what you're after, obviously. I think that the DNA home testing business is going to continue to grow out, and it's going to be become much more diverse. I think it's going to cover more than just your ancestry or detection of certain genes. I think there's going to be there's a real future in that area, that in many areas that I think the drug companies and pharmaceuticals would really like to get into, and they need partners with cash to joint venture. And I think that's where this one is coming from. But this is just that's me. TWK Gaming. Bruce, how you doing? Flo says it's going to be a great week, big week for GameStop. Antoinette, hi there. Good morning to you. Manu, hi, Bruce from Manu and me. Tom Henry, laugh out loud. MG Toe, where's Robert from? Beach for sure. That's where I want to go. I want to go to the beach, says Bism. Uncle Bruce, Andrew is here. How you doing, Andrew? Seth, Uncle Bruce, how you doing? Blah blah. Beach, of course. Traveling is tiresome. 2J, thank you for the Sunday morning donation to Stock Markets with Bruce. All donations gratefully and humbly accepted. Thank you all so much for those, and welcome aboard. I prefer the beach, says Manu. Antoine, I live in New York. Good morning, Bruce from Spicy. Come on down to Port Aransas. Coming down to Port Aransas, Seth saying, let's make some money and go. Right on. Keep up the great work, Tony. Thanks, Tony. Still holding my 2 shares of GameStop. We'll see how it goes. Joe, right on, Joe. Building a database of DNA, selling and buying data for medicinal, hereditary factors, and mental health risks is a rather good business plan. The bigger the database, the more you can get data you can get from it. That's right. And the more valuable it becomes. Absolutely. And the more research and the more results you have, you bet this is all going in the right direction. It's a business that has to become a very, very big business. Look at the sun. Sun's still bothering me over here. Unbelievable. It has become a very, very big business with millions and millions of participants, and this company's on its way to that. Aaron, good morning, Aaron. Welcome back, and thank you, Bill. Thank you for all of your kind comments all weekend long, everybody, and all this past week. Derek, I live in New York. We're getting snow today. I hear. I hear. Byron, good morning, Bruce. Bob is saying all-inclusive Mexico. Then first, then I'm going cruising in late 22. Right on. What about the dividend? Will there be a dividend? I don't know. I've been speculating that, what GameStop could do to really shake up the shorts is declare a cash dividend or issue a rights offering and really mix it up. Don't know if that'll happen or not. It's just me, being devious and going, what can they do to really screw the shorts? Oh my gosh. Let's see here. You should be rich being retired. Where did you make the mistake planning for retirement? Maple Leaf Dave, thank you for those kind, gentle words. We all do what we do in our lives, and we all make our decisions on the fly because you don't get to kind of, sometimes you don't get to think about it. But I've had a wonderful life, and I'm a very happy person. I don't know if you've noticed that. I'm generally a fairly upbeat guy. Would I like to be a millionaire? Yeah. Would I like to win the lottery a few times? Yeah, I would love to have had that happen. But I'm an average middle class guy, and I've had a lot of experiences in my life, and you kind of you do what you have to do as a father, and you look after your child, and you make sacrifices when you become a parent, and you can't just do that anymore because you're not married couple without kids. Things change, and so you kind of move on, and you adapt, and here we are. 2021. Who would have thought? Uncle Bruce is talking to almost 50,000 viewers on his Stock Markets with Bruce channel. That's now only 6 months old, but in the last month it's just gone crazy. And traveling with Bruce, fantastic. I now have over 110,000 subscribers between the two channels. And I started everything August 17th, not knowing a thing about YouTube. So I'm feeling pretty good. And I'm very excited about the future. Do I expect to become a millionaire in the next year or two? No, I don't. Will I be disappointed if I don't become a millionaire? No, because I'm not expecting to be a millionaire. But you never know with YouTube. That's kind of the funny thing about this business, that when you're on the air, and you go live or you do recorded shows, you never know if something you do could go absolutely stupid viral. You just have no idea. And this channel has just exploded with over 1.3 million views, and that for me as a small YouTuber, this is phenomenal. It's wonderful. I mean, my relatives are calling up, going, I can't believe how many people are watching. So I'm excited. Thank you, everybody, for being here. Does GameStop offer a dividend? No, it doesn't. It doesn't do a dividend payout at the moment. Can you explain the Max Payne theory? No, I don't know what that is. Good morning, Sano. Timothy, as an introvert, I never thought I'd miss walking through a big crowded crowd of people. Funny, it's kind of neat being a sort of an anonymous person going through a big crowd, and just kind of, be a fly in the wall and see what people are talking about and hear and stuff. Anyway, there you go. Who's winning today? Still only focusing on GameStop. We got more to talk about. Hello, Amy. Morning, all. Arnold. Antoine, do you feel Melvin will pay their bill this week? Oh, yeah, they'll pay their bill. Melvin is fine. I wanted to talk a little bit today about hedge funds because, they've been in the news the last few weeks. And people have asked me a lot of questions about hedge funds, and I've got some stuff. Thank you, Maple Leaf Dave. Didn't want to be offensive or anything, and I didn't take it that way. Honestly, I'm fine. You're great, man. Thank you for being here. I really appreciate it. Do you think Dogecoin a commercial will actually be on the Super Bowl? I don't know. I don't follow cryptocurrency stuff. I'm just not into that deal. It doesn't excite me. I have no confidence in it. Maybe I'm too old, maybe I'm just too old school to understand it. Anyway, Dave Gross, welcome. Happy Sunday, everybody. And Tony says that we just got to accept the fact that GameStop got burned by big guys and no one will be held accountable. Well, there's a lot of behind the scenes, this discussion going on between regulators, 7 days a week, 24 hours a day, believe me, worldwide. What the fallout will be, I don't know. Could it be minuscule? Could it be gigantic? Could it be behind closed doors? Conspiracy theories abound, all right? But the game isn't over. The story isn't over. It's not like this is a company that was destined to go bankrupt in 3 months anyway, and now the stock was manipulated to unbelievable heights to shadow that. The company was not going to do that. The company was and is and will continue to evolve into becoming an online e-commerce company, and that's where they're going. I think they're going to eventually offer more products for sale than they have inside their physical stores, because online you can just post many more things. I think they're going to be approached by many manufacturers, a ton of manufacturers globally, for them to include their merchandise onto their website to their existing 55 million members that already, love the company and, follow or in the club. And I think that of the 2.4 billion gamers, GameStop will now be advertising to all 2.4 billion globally. These manufacturers will know that. They know that when GameStop has a review, like a product review about something, which I think is another area that's coming, it'll be taken with some seriousness. It'll be really appreciated by the gamers. And I think that this company is going to be a whole different kettle of fish a year from now going forward. And I think the stock analysts will eventually come on board to the notion that the company is no longer to be perceived as a brick and mortar outfit anymore. And it is now to be compared to other online marketing entities. And this one is in a niche of electronics, gaming, accessories, and then diversifying out. And some on Wall Street, some analysts will never forgive the company for being a brick and mortar company. They will never get over it. They just won't. And others will never want to cover it because, as far as they're concerned, it was a dog stock for too long, and they just don't believe in it. And then there will be new analysts writing about the company who only cover e-commerce type companies. They're going to add GameStop to the mix, and then some of the existing guys will say, okay, well, yeah, it's true, they've evolved, but how well? Are they any good at it? Are they going to make any money at it? And some will be very critical, and they will say, you show me that you guys can make a ton of money, and I'll buy into your story. But if you can't show the investment community, if you can't show the analytical community, if the analysts just aren't being impressed. I'm trying to move something here to cover this sunshine on my head. I am desperately trying to stop this. It's driving me nuts. Now I got it down here. It's so funny. Some analysts will never be moved. It's human nature. And will they miss an all-time breakout of the stock? Maybe. If you don't cover it, you can't say that you were on top of the story when it was, whatever price per share. Now it's up here, and you can't take credit for saying, hey, I've been talking about the company for 2 years, and I've been telling people to buy it for 2 years. You can't do that. But I think there's a number of analysts out there saying, I'm willing to take that chance because these guys have let people down before. I got to stop this sunshine. It's driving me crazy. There's people who are going to say, I'm prepared to take that chance to never be the guy that ever covered this story. And I missed the whole thing. Whatever. You see that sunshine on my chair over there? You see that? It's driving me nuts. Hang on. Let me see if I can It's a gorgeous sunny day in Creston. How can you tell? Poor Bruce. Bruce the YouTuber is having struggles. There's a star that wants to shine light on him. Now I got all this. This is crazy. This is insane, people. I need a studio, maybe. All right, let's try it that way. It's a little better. It's a little. I just have to. You know what it is? Time. Time will be my friend. The sun will eventually move on. Oh, look at this right here. I just got to make sure I have that. There you go. I can lift it up and get it off my head, or I can lift my music stand down with my big ass iPad and get it down. What am I going to say? Guys, welcome. Anyway, we'll see what's going on. 38 below Celsius in Innisfail, Alberta. That is cold. There's an Arctic front coming to your town. If you're in the USA, many parts of the United States and Canada are in a deep freeze and going into one. We're going to drop to about 0 Fahrenheit by Wednesday night, Tuesday night. And then we kind of get back into the mid-20s and upper 20s towards the end of the week. But there are places where it's going to be minus 20 Fahrenheit. And there's going to be places in the U.S. where the highs aren't even going to hit 0 for a few days. Major Arctic problem coming around town, and that's just the way it's going to be. Anyway, welcome all. Spicy, welcome. Lone Succulent Radio, good morning. Bullcraft, welcome. Seth, how you doing? Any word from James? Well, we gave James the big explanation on Friday's close to let him in on how he should start investing. Hopefully James is doing his homework. Stan, is GameStop going to the moon? I don't know. I'm going to say I don't think on Monday morning it's going to open at $1,000 a share. There's my bold prediction. But I will say that Friday was the first day of stability and upticks, and the oversold scenario began to show itself because the shares have been blown out by a bunch of investors. And I think that the position is now very oversold. But does that mean it'll go to $1,000? No. I'm expecting the corporation GameStop to talk more. Now they're now going to bring out corporate announcements and updates, and that's what we're going to see. All right, we'll see what happens. Harley says Bruce never told y'all to buy it. Just what is it, Bruce? If they raise the dividend, would that force a short squeeze? No, it would just cause a great consternation and pain to anyone who's short the stock. If you're short 1,000 shares of GameStop and they were to come out with a $1 cash dividend, special cash dividend, you as a shorter would have to put $1,000 to your broker. Your broker will take $1,000 out of your account, bottom line, and they will give that $1,000 to the person that they borrowed the stock from, the brokerage firm. So if they borrowed that 1,000 shares, and this is just a simple example in plain English, if they borrowed that 1,000 shares from Ameritrade and you're at Robinhood, Ameritrade would be sent $1,000 from your broker, and then that broker will credit the individual who owns the stock the $1,000. Whoever bought that 1,000 shares that were shorted gets the $1,000 dividend because they're a shareholder. They own 1,000 shares of GameStop. They didn't know, and they don't care that they bought the stock from a short seller. They don't care at all. They are getting their shares. So as we are speaking today, as of what was it, the 15th of January, the official story was that there were 60 million shares of GameStop shorted and 70 million shares of GameStop issued by the corporation. That's 130 million shares flying around out there, of which 20 million are held by insiders and management that they don't trade it. Virtually not at all. And of the 50 million other shares that the company created, 40 million really don't trade at all because they're held by mutual funds, index funds, and so on, longer term investors. And then there's 10 million of the 70 million that actually trades, and then the 60 million shorts that moves around. So there's 70 million shares out there, but the 60 million that's shorted, everybody who owns that stock gets $1. That's $60 million. The short sellers have to cough up as a penalty, as a fee. Because every shareholder is going to get $1 a share if that were to be done. And I was speculating on last week. I was having fun saying, wouldn't it be neat if they declared a $5 dividend? These shorters would have to come up with 300 million cash to pay for the dividend. And of course, between the day the company announces the dividend and the day that the company is paying the dividend, the so-called record date, there'll be all kinds of shorters getting out. They don't want to be obligated to come up with $5 additional. They just want to buy their stock back and get out of their position. Well, of course, that created a mini stampede into this market. Yeah, up you go. And of course, if the shares are at 95 and you got to buy them back, or you got to pay a $5 dividend to hold them at 95, plus the added cost of carrying the stock and the margin requirements are going high, shorters would be really upset, and that would be great for those of you out there who are long the stock. Of course, I don't see that happening, but it would be kind of neat to watch it. Anyway, companies they could do a special dividend if they wanted to, but they really can't justify a special dividend. They don't have $350 million lying around to give their 70 million shareholders $350 million at $5 a share just on a whim. But they could say to their shareholders, well, we're doing it to screw with the shorters because we don't like them. But this company isn't run by an Elon Musk. There is no Elon Musk character at GameStop. There are a number of key people on the management team of GameStop, but there isn't one leader like an Elon Musk or a Steve Jobs or these. No, that's more by committee, and so no, that's not going to happen. All right, what's going on here? Thank you, Tuan. I'm 25, and I think Uncle Bruce is awesome. Leonard, we love Uncle Bruce. Jack Bauer, I'm a hockey player. It ain't over after the first period. We're still only in the first intermission. Let's see here. I want to get to some of your comments and some of you've made donations. I want to highlight you as well. Dylan, thank you for this donation. I want to try a time to a post-COVID recovery investment into cruises. Carnival, Norwegian, 55 pre-COVID, now 24. Please advise, do not buy cruise stock. That's my opinion. Cruise stocks are going to be hurting for 2 years from now at least, because the hope is that we get back to cruising. Yeah, but the reality, we won't be cruising at all this year in 2021. I don't see cruises starting at all. Canada just shut down their ports for a whole year until February 2022. So there will be no Alaska this year, no New England cruising. There are probably now 50 to 60 cruise ships that were planning to go through Canada on their way to wherever else they were going, or USA to Canada and back, or USA to Alaska, Canada and back. All those ships now have to be rerouted. They're all going to be basically idled in the waters, because you can't just you got to refund all these people their money, or you've got to offer them a cruise credit or a refund, their choice, and then you should give them a choice about, well, where can you go instead? And so if you were thinking of an Alaska cruise this July with 4 people, and each of you are paying $3,000 each to go, there's $12,000 that either the cruise line is going to give you back or offer you a credit of some kind for a future cruise. But they can't offer you a cruise in August or September to Alaska. There's no cruising all year. They can't offer you a New England cruise. So all those are gone. Now they can only offer you cruises that they've got on the books that they might be able to offer you. And realistically, the cruise lines are talking spring and summer of 2022. And those cruises are probably all sold out already from other people who were canceled 6 months ago, 9 months ago. There are 15 million people out there with probably cruise credits waiting to go on a cruise this year, 2021, which won't happen, so they'll be canceled again, and 2022, and we don't know which ships will be where and under what capacity limits. It's a mess, and these cruise lines are not bringing in fresh cash from first-time sailors and cruisers who haven't got cruise credits until probably 2023. So these financials that the cruise lines are sitting on are going to be the ugliest financials for the next 2 years that you can imagine. And the shares where they are right now are way overpriced. That's this man's opinion. There you have it. Okay. 2J, Bruce is like the dad I wish was mine. Thank you. I think, are you a good kid? Because there's some nasty people out there. Some of you kids don't listen to your mom and dad. Thank you guys. Let's see here. Let's give Bruce some love. Press the like button. Thank you for those who are giving me thumbs ups. I appreciate that. We've been getting, I've got 169 thumbs up so far, and there's about 800 of you here. So thank you for hitting the thumbs ups button and helping YouTube discover me and helping other YouTubers discover me and and become part of the Stock Markets with Bruce family. There, we just hit the 200 mark on thumbs ups, 224. You guys are awesome. Thank you for these. The momentum is huge. If you watch almost every YouTuber, they will virtually beg you guys, please give my videos thumbs ups. There's a reason for that, and it's the analytics, the computers in YouTube's, Google's universe. They sense momentum and they reward it, and especially if it's a positive engagement kind of a thing. Every time you comment to me, and every time you do one of these, that is triggering YouTube to go, we gotta promote this channel, because this channel is making people happy, and they're satisfied, and they like what he's doing, and they're engaged with this individual. Whatever the topic happens to be, they're engaging with this guy. So let's promote him even more. 302 thumbs up. We just broke 300. So thank you, all of you, for these thumbs ups. And anytime you watch any video I make, please throw the thumbs up if you can, because that, even a recorded video, huge difference. Okay, let me kind of move through here. Bruce is awesome. Yeah, that's right. Bruce, are you a Calgary Flames fan? Go Leafs, go. When I was younger, I was a Leafs fan, because in my childhood, I lived in Ontario near Toronto. But when I grew up, and Jen and I moved to Calgary, the Flames showed up. I showed up in Calgary in 77. The Flames showed up in 81, 82. And of course, we became Flames fans because they were our hometown team. And that was pretty cool. And here we go. Austin, there's a good question. How much power do retail crowd really have in the fate of GameStop? I've read retail investors hold just 17% of all the shares. So it seems like we're along for whatever ride the institutions take us on. Well, of the 17%, there's 83 left over, the other 83%. Management has 20. And then there's 63%. And that's held by mutual funds, investment funds, hedge funds that are long, large investors that, are involved in the thing. And then there are the speculators, the large, guys who are moving the market. But 17% is a lot of power when you think that we're talking about only about maybe 15 to 20 million shares of the free float that really changed hands. That a lot of that is in retail hands. There are, of course, the shorters that, they're in and out all the time with their whatever number, 28 million, 26 million, 60 million, 70 million shares. That fluctuates. And that's where all this volume comes from. I mean, there's massive tens of millions of shares of volume are coming from the shorters getting in and out multiple times a day. Day traders getting in and out multiple times a day. And that's momentum trading, of course. Retail investors can make a difference depending on whether they're motivated or not. And if retail investors get the sense that either the stock is on a run because of a major event or a short squeeze like we saw a little while ago, or future developments, they'll pile in and they'll join in with the momentum. But I can tell you that hedge funds are momentum traders too, to the tunes of millions of dollars a trade. And that's the fact with all publicly traded companies. This is not a GameStop phenomenon. This is typical market everything. Okay. Let's see. Lollipop. I bought 100 shares of AMC for $12.50 a piece. Can I sell a March 22nd covered call with a $10 strike price and a $2.69 premium? If the buyer exercises his option, make a profit. Anything wrong here? You are correct. You own the stock. You got 100 shares. Great. You can write one covered call contract against those shares, and in this case, March 22nd expiry date with a $10 exercise price, and you can bring in $2.69, which would be $2,690. You would be given. You have that now. And if the shares stay above $10, the likelihood is you're going to lose your shares, or they're going to buy your shares from you at $10 a share. So you end up then with, you're going to get $269 premium. That's $269, not $2,690. $269 you're going to get cash. You're going to get 1,000 cash for the 100 shares at $10. So you're going to get $1,269, but you pay $1,250 for the position. And the shares on Friday were trading at what price? I believe they were trading around, Where's my little thing here? Just a minute. I've got a closing price. There we go. Oh, I don't have it there. Hang on. AMC closed at $6.83. So at $6.83, you're down money, right? You're down about $5.50 a share, $5.60 a share. So you're down half your dough. But if you write a contract at a $10 option price and take in the $2.69 premium, you're getting $12.69 if you get taken out. But you're only going to get taken out if the shares go over $10 a share in actual value. Because if the shares stay at the $6.83 between now and then, or under $10 a share, they don't go up that high, you're not going to get taken out. Now, if the shares go to $9.50 a share in the open market and you still own them, the options die worthless. You keep the $269 that you got, less your fees, of course, for commission. But you got your $269 for your premium. You still got the stock. It's at $9.50 a share. So you're only down $3 on the stock, but you got $269 on the premium. You're really only down 35 some odd cents. So you've come a long way, baby. Thank you very much. But if you don't write the option, the shares go back to $9.50, you're still down $3 a share. So instead of being down $300, you're only down about $31 without fees involved here. Yeah, so writing options against a position where you let the gambler take the risk with the option is a good strategy. That's done by all investors of note, like mutual funds. Hedge funds do this all the time. Investment funds, strong and large investors, common deal. Insurance companies own stock in Apple, and they're writing options against their stock. Out of the money options. And they might be good for 2 weeks, 4 weeks, 6 weeks, 3 months. You choose the premium, you choose the timing, how long the option is good for. The longer the option is good for, the more money you'll get. The closer to the market you are, the more money you're going to get. But the longer the option has to live, you have to wait longer to see what ends up happening with it. And the closer to the market you are, the likelihood is you might, on a swing, you might get taken out. So if you don't really want to be taken out, you just want to bring in the premium money. It's a balancing act as to what price to pick at for the exercise price, how long you want to write it for versus the premium you're going to get. So there you go. As I said, if it goes to $15 a share, let's pretend it goes to $15, you're getting $12.69 because you got $2.69 now plus $10 later. But if the shares go to $9.50 next week sometime and you sense, oh man, they might go to $12 or $15 again, you can always buy a contract back that you wrote. You wrote this contract for $2.69. It might be trading at $3.69. So you're losing $100, $1 a share by buying back this contract. But you might just turn right around and write a new contract for the same date at $15 a share. So you're paying $3.69 to get this one back, but you're writing a new one for $2.69. But you moved your exercise, your buyout level from $10 strike price to $15, or $10 to $12.50, or $13 or $14. So you're pulling the string on the exercise price, and you're rolling over the premium money. These are strategies that you can follow. Bullcraft, it's snowing in New Jersey. Welcome. My comments are just shifting up here. Here, Bruce, I have 381 shares at 60.55 for GameStop. Should I hold till the end of the year? See what happens. Look, Casey, as I was just explaining here to my last guest, you could write 3 contracts against GameStop right now. For options that expire a week from now, a month from now, 3 months from now, at 65, 70, 75, 80, whatever price you want to choose at, and you'll bring income in to hold the stock. So if you're thinking of holding till the end of the year, because as we've been talking here about the corporate rollover and the change in business, you want to be around for that as a possible idea. You could write a contract that expires 3 months from now at $80 a share, and you might get I don't know how much you'll get, but maybe you'll get $10 a share in premium. Let's just suppose you did. I'm pretending. So if you get $10 a share on 3 contracts, that's 300 shares times $10. That's $3,000. You get that right now. You get $3,000 right now. That takes $10 a share off your acquisition price. In other words, you're into the stock now for $50.55 because you got $3,000 given to you. And you're offering someone the chance to take you out at $80. And if you do get taken out at 80, you've made almost $20 profit on the shares plus the $10 you got. That's a $30 gain on a $60 buy. 50% on your money. What's wrong with that? Now, again, if the shares go to 500 a share, you're going to go, oh man, why did I offer it at 80? I'm an idiot. But you can make moves. If the shares go to 75, in 3 days, you can buy back those calls you wrote. They'll cost you more to get them back, but you can rewrite new calls up to, let's say, 120. You'll just write 120s, and there'll be 3 months to go, and you now have just added $40 to your exercise takeout price, $4,000. Well, in case of 300, 12,000 more. And the premium you got to help offset with the premium you're buying back. You can do that. You can always readjust your positioning anytime you want. I would recommend, if you're going to write options, pick up 19 more shares. The best price you can get here. Get 400 now, and then write 4 contracts because those 81 shares, you can't write a contract against them. So get 400 shares. You can now write 4 call contracts against your stock, whether they're 75s or 80s or 85s or 90s or 95s or 100. You go as far out as you want based on how long you want to write them for, and then you'll see what kind of a premium you'll get, and that cash will come into your account immediately within 24 hours, 48 hours. The cash is in there, and you just sit there and wait. So yeah, I mean, those of you who have GameStop, if you're able to buy enough stock, if it goes low enough and you're able to buy enough stock to get at least 100 shares, you can now write at least a contract and bring some revenue in from the stock. I know there's some of you in there at $300 a share and it's trading at 60 something, and you're looking at me going, Bruce, even if I get $10 from an option premium, hey man, it's 66 on the close in the aftermarket. I write an $80 contract and I get $10. I'm only getting $90. I paid $300 for this stuff. True. But if the $10 comes to you in the next 2 weeks and the stock doesn't go over 90 or 80 or 90, you get $10. Then you can write another one for 2 weeks or 3 weeks or 4 weeks or 6 weeks. If you can bring in $10 a share every month or so in premiums, that just brings your cost down bit by bit by bit by bit. So you're not just sitting here going, I'm bored, I'm upside down, I hate myself, there's nothing. Here you're in the game and you're flowing cash and you're bringing cash in. Now, you take the cash in and your attitude is, if they buy me out, they buy me out. I don't care. But you bring in $1,000, you buy $1,000 worth of stock down here to keep averaging down your price. And 2 weeks later, you're getting another $1,000 in premium. You buy the stock again, whatever that's trading at, and you're adding to your position. Eventually, you'll have 200 shares instead of 100 shares. You'll start writing 2 contracts at a time. And now build flow that way. And so, yeah, maybe it'll take you 6 months to get all your dough back, or a year and a half. But you are not dead in the water waiting for a huge recovery in the stock. You're averaging down. You're cashing in some cash by being a shareholder, and you're building up your position. So there's nothing wrong with that strategy. Absolutely nothing wrong with it. You just have to want to do it if it interests you in any way. JAQ, Jack, $1 donation. Thank you. Don't cry, son. Will airlines share the same story as cruising? And due to it being leveraged business, what's the recovery look like? Airlines looking bad. Yeah, they're bad. They're in bad shape too. Of course, they're just as bad off as the cruise lines. But the reality is, airlines were much heavier leveraged going into the COVID than cruise lines were. Cruise lines had way more ability to borrow against their assets than airlines did. The airlines exercised their lines of credit right away as soon as they were, faced with the restrictions. But that only helped them for a couple of weeks, and then it just kept going. And then they needed government stimulus, and there have been now 2 or 3. With the latest one coming, another 1.9 trillion, and there will be tens of billions going to the airlines again to, partially offset their pain. But it's bad news. It is just awful. Boeing, Jet deliveries are down. Future orders have been canceled. I mean, it's contagious. A and B, thank you for your donation. Not sure if this is a relevant question for a Q&A, but Vanguard has an IT industry ETF index fund, and it has gone up about 250% over 5 years. What are your thoughts? Wouldn't surprise me if that ETF, which is an exchange traded fund, index fund, is heavily dominated by Apple, Alphabet, which is Google, Facebook, Amazon, the big players, and the FANG stocks have been big winners the last 5-6 years. If you look at any chart from, the biggest market capitalization corporations, you can tell they've all gone up. Apple has already split their stock. Tesla just did a split, but there've been some splits. There've been, very positive earnings, and even the virus is not stopping Amazon from making a lot more money, or Apple. And you think with all the retail stores, you think Apple would be in trouble, and they're not. They're doing just fine because you can buy Apple online and you can buy Apple products through other retailers. That is a way to build. And I'm saying to all of you out there, if you're new to the market and you're not sure how to get into the market, and you want to get into the market in a conservative way, but you don't have a lot of dough, I would recommend that you look into ETFs as a way to make an entry. So if you have an account at Fidelity or Webull or Robinhood or others, and you're allowed to buy ETFs through these platforms, again, you're a small investor, you've got less than 10 grand. Even with $1,000, you can buy 5 different ETFs. One could be just the S&P 500 performance. One could be an IT ETF based on mainly the high tech industry. Could buy an ETF that follows maybe housing. You could buy an ETF that whatever turns you on, whatever you want to be invested in. And you could always do Google searches on the best performing ETFs and the sectors that have done the best. And you put $200 into 5 different ETFs. You now have an investment inside an ETF. You might have a piece of 40 different companies, 80 different companies, 200 different companies in just one ETF. As you've got 5 of them, and you're now covering the S&P 500. You've got the NASDAQ covered. You've got the Dow 30 covered. You've got you've got the technology industry, chip industry, whatever you want to be involved with. With $1,000, you're involved in 2,000 different stocks, all inside 5 separate ETF vehicles. And then every month you've got $200 or $300 more that you want to invest. You throw that into your account and then split it into 5 and put 20% of that new money into the 5 ETFs and just build a position. And over the years, you're looking at, hopefully, this kind of growth that this gentleman was just saying, this person was just saying. And if you're growing by 10 or 15% a year in value overall, you're building up a bit of a nest egg. And you're doing it in a conservative, systematic, not going to stop kind of way. And you are a miniature mutual fund is what you are. You're a little mutual fund. You're your own self-administered little fund. And you've got, after 2 years, you've put in $3,000 of your own money, and it's worth $5,000. Or you put in $4,000 and it's worth $7,000. Fantastic. You can do that for years and years. And once in a while, you might go, well, this ETF is up 15%, but my others are up 60%. Either I'm going to just shift out of this ETF and put the money from that ETF into the other 4 and just build up on those. Or I'm going to get out of this ETF and I'm going to buy another ETF that is a growing segment of the economy that I'd rather be into right now. You can sell one and buy another. And you can do that anytime you want, as much as you want. And you can sleep at night, I would say. I would definitely say. Eric, thoughts on Wanda upgrading AMC to Class A shares? I'm not sure what that means. I don't know that story. I'm missing something here. Wolfgang, I missed your comment. If I bought GameStop at 300, I would go find a hobby instead of hoping for the recovery. I'd rather miss the recovery than torturing myself on a daily basis. Well, again, if you've never invested before in the market And the first investment you ever made was buying GameStop at $300 a share. And you didn't know about me, and you didn't know about how markets work. I'm sorry. You kind of made the wrong move. You did everything wrong. You bought into a heavily hyped market where the shares were once $5 a share several months ago. They're now $300, and you're the last guy into the store, and you didn't do your homework. If you'd done your homework, any homework, you would figure out that a lot of analysts and professionals say, "Don't do that." don't do. You can find that advice for free. Don't do that. Anyway, what can I say? Paper City Gamer. Bruce, you should create a Robinhood account and share it with the live stream, and then get a free share for signing up, and you get a free stock. A Paper City Gamer. First, I can't do that because I'm in Canada, and it's only as a Canadian I can't have an account. But second of all, I'm just not interested in being someone with skin in the game, and then being accused of viewers of favoring my investment entities. It's not what the game I don't want to play. There are many others out there who are doing this, and you can watch them and play with them and mirror their activity all you want. But Uncle Bruce just is not interested in going there. And Uncle Bruce loves being on the sidelines, a fan in the stands, and I'm the guy you can come to, hopefully, where I can try to make heads or tails of it for you. And I have a clear conscience on whatever I'm talking about. Like I said, I like the GameStop corporate story. I didn't like what happened to GameStop shares doing what they did, up and down. I certainly am not happy to see investors get caught at the high end paying top dollar when they missed the boat. But then again, how could they have known that they missed the boat 3 weeks earlier when the shares were $15-20 a share? At that time, I was saying to anyone who would listen, if you're going to buy this stuff at $15-20 a share, keep in mind it used to be $5. And whatever you're putting in there, make it cash and just sit back and let the corporate play out. Had I known that the shares would go to $300 a share, I would have told everybody out there to buy them because they're about to go to 300 in 3 days. No one knew that. No one could have known that. And then here we are at 66 or something now on the aftermarket. So there you go. But GameStop corporately, I do like the long-term game plan that management has. I do. I just do. Again, if you have GameStop and you're in at $300 a share and you've got, I don't know, let's say you've got 60 shares and they're trading right now at $60. You've got $3,600, $3,800, $4,000 worth. You don't have enough to write a contract. Theoretically, you could sell the stock and buy another stock like AMC or other low traded company, whatever company you like. And then you can become an option writer and try to recoup your original investment in GameStop by writing contracts on other stocks that you now own. So yes, if you bought AMC at under $7 a share, 100 shares is $700. If you've got $3,500 from the sale of a GameStop situation, you can buy 500 AMC shares, but you're not going to get a $10 premium on AMC options. The stock's only a $6 stock. So if you wrote a $10 contract, like another viewer was just saying, that have a couple months to go, and you can bring in $250 a share, and you've got 500 shares, you'll bring in $1,250. It's not going to get you back to the $300 level from GameStop in one option right now, but it's $1,200 of cash given to you by offering AMC for a few months at $10 a share. There are some people who will do that. There will others who will say, Bruce, I'd rather have 100 shares of Apple at $140 a share if you can afford it. That's a $14,000 buy, because it's not as volatile a company. The stock doesn't go up and down $25 a day. Apple is quite steady, but you're not going to get massive premiums either for a 2-week contract that's $25 out of the money. You're not going to get $20 a share premium for Apple contracts that are $30 out of the money. That's not going to happen. So it's a trade-off. You've got volatility, you get volatility, and that's in options writing, options buying, stock buying, welcome to all too. But if that's what you want action, you're craving action, then you'll buy the most volatile stocks out there. And one of them used to be called Tesla. Tesla was unbelievably volatile a year ago, crazy volatility. Years ago, it used to be Amazon used to be a volatile stock. There was a time where Cisco was a volatile stock decades ago, but they've all matured out and they're now multi-billion-dollar behemoths that have made it through those early days, and they're not volatile anymore. And so the options have calmed down, and big institutions put billions into these entities because they're not going anywhere. The chances of Apple going out of business are kind of low, wouldn't you say? Anyway, you get what you pay for, and if you want action, you can bet on the Super Bowl today. You want action, you can bet on the Super Bowl depending on where you live. There's action, but there's also a potential you'll lose it all. The one bet you make is the only bet you're going to make. Hey, Bruce, I'm from the future. Did I make it in time? GameStop is about to go to $200 a share in 3 days. Hope the time machine worked. Welcome back. That flux capacitor of yours, I hope it's working for you. And say hi to Doc Brown for me. And away we go. Someone is asking here. Someone's asking me about the, here we go, William, 100 ETF shares can be optioned also. Is that correct? I think so. If you have 100 ETF shares, you can write an option on those. So if you've got 100 ETFs in a technology fund, and I don't know what they're trading, I don't know this off the top of my head, but if you own an ETF and it's trading at $50 a share, you got 100 of them, that's a $5,000 investment, you can write a call option against your ETF share. Yes, your 100 shares. Again, for next Friday or the Friday after that, or 6 months from now, or 9 months from now, anywhere in between, you can write options against shares. And the Chicago Board of Trade is where they trade. And depending on the brokerage firm you have that you use, you have to follow their house rules with regards to the requirements to be able to write options, trade options. The kind of accounts you have to have a cash account. There used to be you had to have an options account. Now it's all in a margin account. It's a margin account, not cash account. Margin account, and you have to sign off all kinds of waivers because you give the rights to the house to sell you out at any time if they so choose. You've got to be able to live with these risks. It's a different game. You've got to do your homework, and the Q&A section of your brokerage company's site will go through all of this. And they may have a tutorial that you can watch that they'll show you how you can do this through us, how you can write options or buy and sell options. We will show you, we'll tell you the risks and learn. Yeah, do your homework and study it. Don't be in a hurry to try and do it. When you make your first move, make it an educated move. Okay? All right. Thank you, everybody, for being here. 965 of you are here right now. We have 458 thumbs ups. That's awesome. Almost half of you have given us thumbs ups today. If you could spare a thumbs up for this show, I would very much appreciate it. Thank you, everybody. Thank you for super chats and anyone making a donation through my PayPal account. Again, the appreciation is real. And I thank you all for being here and your kind words and your encouragement and constructive criticism. Appreciate it. We're now at 526 thumbs ups. They are coming in. Thank you, guys. It is making a difference to the channel. Okay. Alrighty. I wanted to just mention something about hedge funds to you, just quickly. Someone asked me the other day, how big are hedge funds? How much money do hedge funds actually control? And let me tell you, I was doing some reading this morning, and the last time, the latest information I could get is a couple years old, but it's over $3.2 trillion with a T, like Tesla, trillion dollars, 3.2 trillion. And there are between 10 and 15,000 hedge funds around the world in existence. So it's not like there's 15 of them run by a bunch of guys in a little club in New York that run $100 billion with a hedge fund. $3.2 trillion global business and growing, with over between 10 and 15,000 is the estimate of how many hedge funds there actually are. Many hedge funds are headquartered in the United States, offshore like the Cayman Islands and the Bahamas, Switzerland, tax-free jurisdictions, but also in the United Kingdom. A number of managers, the actual managers who manage hedge funds, they're scattered around the world, but New York has a very high collection of hedge fund managers and employees that work for hedge funds. London, England, Berlin, Frankfurt in Germany, Milan in Italy, Paris, France, Amsterdam, Tokyo, you name it. They're around the world. Hong Kong has a bunch as well. Hedge funds are global and they are very diversified. Some of the biggest names in the hedge fund world, I'll rattle off some of these guys that you might have heard some of these names or heard of these people from time to time. And this is just a small selection here, but names like George Soros. He runs the Quantum Group of Funds, billions of dollars under administration. Ray Dalio, D-A-L-I-O, Ray Dalio, Bridgewater Associates, the world's largest hedge fund in 2017 at $160 billion under management, showing you how big some of these guys are. So when you hear a week ago that Melvin Capital had to bring in $2.75 billion of cash to kind of cover some losses, here's a guy, Ray Dalio, he's managing $160 billion. So he could buy GameStop over and over and over again if he wanted. He's much larger than a lot of public companies. Steve Cohen, the name Steve Cohen, that is 0.72. That's one of the two companies that did put in $2.75 billion into Melvin Capital. He, along with Ken Griffin from Citadel, they put their dough in. They manage billions and billions of dollars. John Paulson of Paulson & Co. manages $19 billion. He made his fortune betting against the housing market in 2008. Remember the movie The Big Short? That's how this guy made his money. If you should watch, I recommend all of you, if you've never watched the movie The Big Short, watch it, because the best part about watching the movie, as far as I'm concerned, is they explain in plain English what happened and how it happened and how these people figured out how to bet against the market. They bring in celebrity people to explain it to you in a couple of segments, and it's really an interesting story. Brad Pitt is in the movie and a number of other actors. I really enjoyed it. Of course, I'm a market guy, so of course I'd enjoy it. Dave Tepper, Appaloosa Fund Management. Daniel Ock, O-C-H, I think it's how you pronounce it. Ock Ziff Capital, managing $40 billion. A couple more big hedge fund managers. Leon Cooperman, he's on CNBC all the time. Omega Advisors. Paul Singer, Elliott Mann Group, $23 billion in management in 2013, and he runs another portfolio worth $8 billion more. David Einhorn, that's a name that's used a lot in the public. Greenlight Capital is his outfit. And then Bill Ackman. Bill Ackman has been a very aggressive activist investor, a shorter, goes long, he goes short. He's running the Pershing Square Capital Management hedge fund, and he took a SPAC public that has not yet made a deal with anybody, sitting on about $4 billion in cash inside a SPAC, and they're shopping for the right deal. If they end up taking a company public, that would, to me, would be a private company worth maybe $50 billion or $30 billion would merge with Pershing and go public. That's a deal that's still pending, and sooner or later they got to do it, because if he doesn't do it in the 2-year time frame that he created the SPAC, he has to refund the $4 billion. I can tell you right now, he's not going to refund the $4 billion. He's going to find a deal. He's probably got 20 that he's looking at right now, and he'll find one. When I know more about that, I'll let you guys know, and we'll follow that closely to see if it's anything worthwhile. Yeah, Cooperman was the one crying on CNBC. The Big Short is available on Prime Video. I just checked. Moneyball, not stocks, but a good movie along the same line. Yeah, that's a good baseball movie with Brad Pitt. for free. Thoughts on Dogecoin? No thoughts. I don't follow crypto. It's just not my thing. What is a SPAC? A special acquisition corporation, which is one that I was just recommending the last few days, called Virgin Group Acquisition Corp, a SPAC created by Richard Branson and partners. This company, created by Richard Branson, VG Acquisition Corp, is a SPAC, and it raised $500 million in cash to find an acquisition, and they found one. It's this company right here, 23andMe. The Richard Branson public company is merging with this private company run by this gal right here. This is Ann Wojcicki. She founded this company in 2006, and investors that she's attracted into this company started with her former husband's company that he co-founded called Google. Google was the first company to invest in this company, 23andMe, with about a $3.9 million investment back in 2006, ground floor investment. 23andMe has raised hundreds of millions of dollars since then. They have raised money in 2012, $50 million. In 2015, they brought in $115 million. 2017, another $250 million. 2018, they had GlaxoSmithKline, the big multi-billion dollar pharmaceutical company. They partnered up with these guys and invested $300 million. And they're going to work together for quite a while yet. That was just in 2018. December 2020, they raised another $82 million. They have about 600 some odd employees, sales in that 300 to 400 million range. They're merging with the Richard Branson Virgin Group Acquisition SPAC in a $3.5 billion deal. When it's all said, that's what it'll be valued at. And the day they list the shares, they combine the two, and the shares will trade under the symbol ME. There'll be $950 million cash in the bank for that new merged corporation. Of the $3.5 billion, $950 million is cash. And so they will be very well funded to branch out into additional genetic, genetic home testing kits and everything else. They have only just begun where they're really going to, even though they've been around 15 years. This company's been around 15 years. They're raising a $250 million additional cash financing upon listing. $25 million is being purchased by Ann Wojcicki personally, $25 million personally being picked up by Richard Branson. The other $200 million, I think, is already pre-sold to hedge funds, mutual funds, other institutional investors like banks and insurance companies. It's all gone. It's all spoken for. I think these guys could theoretically raise a couple of billion more in the first 6 months of listing by just issuing stock from the treasury at $20, $30, $40. I think they're going to raise a ton of dough and go into a whole bunch of areas in this business and diversify out from where they've been. And this is why the Branson people wanted in, Glaxo wants in, others want in, and don't be surprised if they make deals with other pharmaceutical companies for other products as well. This is a huge area going forward, and they're going to be one of the best capitalized entities out there in this field. Now, I like the deal. I like the concept of the company. I like how it's going to be so well funded. The shares right now that you can buy are the shares of the SPAC, this company right here. You can buy the symbol VGAC. You can buy shares in this company. It's trading, I believe, on the New York Stock Exchange. And if you buy one share of these guys, the 1604 is where they closed at, $16.04 on Friday. You buy one share of this company, or 10 shares, or 100 or 1,000, it doesn't matter. You don't have to do anything. This company will merge with 23andMe. And when the merger is completed, which is going to take about 90 days, the second quarter of this year, it'll all be done. The stock on the night before will be called Virgin Acquisition Group. The next morning, they're going to be called 23andMe, and you will have one share go away and one share come in. You will now be a shareholder or shareholders of 23andMe. The symbol will be ME. So eventually you'll have your stock symbol will be ME. You'll own 23andMe stock, and the Richard Branson Company people will own 19% of the company on the day it starts trading, and the 23andMe people will own 81% of the company the day it starts trading. That is coming up in the second quarter, and I like the story. I like the prospects, and I like the fact that they can really diversify out. There are naysayers to this deal. What else is new? This is Wall Street. You're allowed to comment any way you want. My commentary is I like the game plan. The first year of trading, I would like to be a shareholder. If I were going to be a shareholder, I would be a shareholder, and I'd be getting in sooner rather than later. The hope I have, and I've been saying this for 2 days since I heard this deal can come down, the hope I have actually is that the shares will continue to fall in price, because they went up to that 18 level from the 14 level when they announced it, and it backed off to 1604 Friday night. The hope I have is that Monday or Tuesday or Wednesday, the shares will come back to the 14 level before the deal was even announced, and that would be a beautiful entry point. Remember, this SPAC raised all their money, the $500 million, at $10 a share. That's how they did it. When they went public, they were selling to, again, institutional investors, mutual funds, pension funds, all kinds of large dollar people, and friends of the brokerage firm that they used. They were selling units, and the units contained one share and a third of a warrant. And for every 3 units you have 3 shares and 1 warrant. And 1 warrant allows you to buy another share at $11.50 a share going forward. And I think you have a certain amount of time after the merger to exercise the warrant. It's a little complicated, but that's how SPACs work. So that's where this $500+ million more is coming from. And then there's a $250 million additional financing on top of that. At the end of the day, there will be $950 million cash in the bank account of 23andMe the day they're listed on the New York Stock Exchange after the merger. And I really like this. For you as a retail investor, those of you who are following me, if you buy this stock, you're getting in as close as you can to either an IPO level, because had 23andMe tried to go public, say 6 months from now, that what they would have been doing in the last 6 months and right now is they would have solidified more cash from friendly hands like Google connections, Smith Klein connections, all the institutions that already invest in this thing. They would have gone out and raised another $300 or $400 million, $500 million. Then they would have gone to the bankers on Wall Street, the brokerage firms, which again are friends of Google, friends of all of these major companies. This is a pretty closed group. Everybody knows everybody. They would have gone then to the street, to the brokerage community, to say, we're wanting to go public on an IPO. The brokerage community would try to convince them to go public at as low a price as possible, so that when the shares start trading in the aftermarket, they pop as much as possible and that they make a big score, similar to DoorDash and Airbnb, all these IPOs that opened at virtually double their IPO price, and many others. Remember Alibaba? Anyway, this entity here, they may have raised money at $5, $8, $10, $15 a share before they went to the market. Then they talked to the brokerage community, and they could have done a deal at $25, $35, $45 a share, raised another $500 million, so that when they traded on the New York Exchange on the very first day, they would have $900 million cash in their hands, similar to what they're going to do now. But you, as a retail investor, would never be called by 23andMe at $10 a share. You would never be called by JP Morgan or Merrill Lynch or Bank of America, whoever's doing the underwriting. All the underwriters would keep the stock for their in-house clientele at $25, $30, $35, $40 a share. you guys would have been allowed to buy the stock on the first day of trading on the New York Stock Exchange after the market maker balances out the buy and sell interest for the opening trade. And the way IPOs have been hot lately with so much cash flying around with the Fed printing money, this deal could have opened at 50, 60, 80 bucks a share. And that's where you would have gotten in at. But because they're doing a SPAC merger instead, you can buy the SPAC right now. You can buy a share in the 19% partner and get 1-for-1 on the merger. And if you can get in tomorrow, Tuesday, Wednesday, Thursday, if it pops back under 15 bucks a share, that's a golden opportunity, in my opinion, to get in there. And now just put those shares away and cross your arms and go, all right, I got my stock. I'm in here. I don't have to do anything else. The merger will go through. I'll be converted into 23andMe stock. And let's see what they do the first 6 months they're publicly traded. Let's see what happens here, because my gut is telling me that they're going to do deals. There are deals coming, and that they've got backing from Wall Street bankers and hedge funds and institutional investors for billions of dollars, because they can now offer, for the first time ever, any new investor coming in to lend to buy stock from these guys. It's publicly traded paper. It's liquid. They might have a hold period for 3 months, 6 months, but that doesn't matter. The ultimate entity is, it's a New York Stock Exchange publicly traded corporation that will now trade on earnings expectations going forward. And in this business, the multiples, the PE multiples, are very high. And so if there's a thought, a hint that this company might make $1 a share profit, $2 a share profit 5 years from now, it could already trade at 300, 400, 500 times earnings now on estimated earnings future. There's going to be a ton of interest to get into this 23andMe stock once it's traded and done. What I'm telling you guys is, this news is 3 days old. This is early, and it's a SPAC. And SPACs are loved and hated depending on which analyst you're listening to on CNBC or these other entities. I like the deal between the SPAC and 23andMe and the overall combined deal. So that's my take on it. If you buy it, you buy it. If you don't, you don't. It goes up, it goes up. It stays flat, it stays flat. It goes down, it goes down. I like the odds of a positive win from this deal. And whenever I find more, I'll let you know about them. All right. So that's this guy's take on what's going on that stuff. All right. Thank you, everybody, for all of these comments and questions. I'm trying to read as many as I can, but there's just a ton of you, as always, which is, I love it. There's 1,052 of you here. Thank you. We have 626 thumbs ups. Thank you. Keep them coming in. You guys are great. DNA data is priceless. I think so. I think this going forward is worth more. These COVID variants, these COVID virus variants, that information is incredibly important. I mean, it's life and death important. These kinds of companies, 23andMe, I think you're going to see them branch into so many various areas of DNA discovery and knowledge. It's going to be extremely valuable, extremely valuable. We'll see what's going on here. Some people are saying here, Maximus, Bruce, the Motley put an article out saying Virgin only own about 11% of the combined company, despite contributing more than 500 million. I don't buy that. I don't buy. Now, it could be, and again, I'm going to say this: a year down the road, all shareholders of the SPAC might own less than 10% of the company. Why? Because in the first year of the company's combined life, they're going to raise more money. They're going to issue out more stock to raise more cash. But they might issue stock at 20 bucks a share, 40 bucks a share, 80 bucks a share. You're in at 14, 15, 16 bucks. What do you care? Do you care you only own 11% of a company trading at 80 bucks a share? Do you care? I don't care. I wouldn't care. So Maximus, it could be that Motley Fool is looking ahead with the funding that they're going to attract, and that's going up. But again, everybody has their opinion on this deal. Some love it, some hate it, others are neutral about it. Positive kind of wait and see attitude. I can tell you this: after it goes, if it goes and goes, there'll be a lot of people going, "Dang it, I should have been in there. Why didn't I buy that stuff? What was I thinking? Oh, I didn't know Bruce existed. That's what it was." The merger will happen. Both boards of directors have agreed to the deal. The lawyers are now putting it together. The auditors are doing their auditing and they're merging the books. It's going to happen. It's about 90 days to get the lawyers and the auditors and the filings all figured out. But it's going to happen, right? Thank you, all of you guys, for these comments. Hey, Bruce, do you think Tesla stock will correct itself because of their current profits are still low? There's a lot of talk right now that Tesla, which is now $8.52 a share, it's trading at 1,300 times earnings. The street, analysts are all over the map. Okay, there are analysts saying it's going to 1,200 a share, 1,500 a share, 1,000 a share. There are analysts saying it's worth $400. There's analysts saying it's worth $200. You can just drive a Mack truck through all of these quotes and estimates. But there is a simple fact about Tesla. They got about, last I heard now, it's about $20 billion in cash in the bank, no real debt. They're opening a plant in Austin, Texas this year. They're opening a plant in Berlin, Germany this year. They have a Shanghai plant that's running now. They have the Fremont, California plant that's been running the whole time. They got the super battery plant in Nevada that's running. That is fact. This company will be a much larger producer of vehicles and solar array and battery systems next year and the year after next year and the year after next year than they are today. And that is why people are paying $850 a share now, because they're buying this stock for the future growth. They could possibly get out at 1,000. They could get out at 1,200 if it gets there, even though that might happen in 6 months or a year or a month for all we know. But there are truly investors who are sitting here going, no, I'm buying this and I'm going to stick around. There are investors in Tesla that have been in here for years. They have averages of 100 a share, $50 a share. They're not selling. They're still not selling. Why? Because when they bought in 4 years ago, 2 years ago, 5 years ago, they felt that the company would be where it is now today, and they're right. And they like that the chances of where the company is going to be in 4 or 5 years, they think it's going to get there. And they think that the shares will be much, much higher then, just like they've gone very much higher so far. So these people are not interested in 850. They might be interested in 2,000 a share, or they will not sell until they get the feeling that the company is topping out, that they've reached the crescendo of potential. That's not going to happen for another 5 years. These guys have got so much expansion going on, so much diversification going on. And now you notice in the last few months, General Motors is announcing all electric vehicles within the next decade. Ford is going electric. Other companies are going electric. They're coming in. Tesla is no longer viewed as that stupid company making electric cars, and no one else is making electric cars. All of a sudden, oops, the big boys are coming in behind these guys. So there'll be competition. There'll be more acceptance, and it'll become more of a normal thing. And what did we hear in the last couple of weeks? Apple wants to make a car through, I believe it's Kia and the Sonata, the Hyundai people. Kia Hyundai are going to make Apple cars because Apple doesn't own factories. I mean, they don't need to own factories. They hire factories. They design the product, and then they partner up with factories to create the product, because Apple has got a limitless amount of money to develop whatever they want to develop. And so now there's another electric car company coming into the fold, Apple. Isn't that interesting? So this is an expanding area. Tesla is one of these entities that, the profits are low compared to the price of the share, but people are expecting the company's profits to grow in exponential ways going forward, and they're paying a premium price today, like they used to pay a premium price for Amazon stock 20 years ago, 10 years ago. Amazon was trading at hundreds of times earnings, hundreds. And analysts saying, some of them are saying, this is ridiculous. Why should we pay this much money for a stock that's just a bunch of warehouses? They're just warehouse places with online sales. What's the upside in that? Until Amazon went, oh, we're into the cloud now. We're into making our own phone now. We're into this. We're into that. We're now into the pharmaceutical business. We're into all kinds of other areas. We're not just a warehouse company anymore. We've got all these divisions, and now they're a 1-point-something trillion dollar monster. And all analysts look like idiots from 10 years ago who said, why should you pay $120 a share for a warehouse provider? Well, because today they're $3,000 something a share. That's why. But again, not everybody was a believer, and that's how this market works. You've got believers and non-believers. $3,352 a share for Amazon, and there are analysts saying it's going to $4,500 a share. You doubt them now? Do you doubt these analysts? You think they're crazy? I don't think they're so crazy anymore. Within 3 to 5 years, it could happen. Guaranteed to happen? No. But likely? Maybe more likely than not. Trading at 80 times earnings. A $1.68 trillion company trading at 80 times earnings. I keep coming back to GameStop. If GameStop were to earn $2 a share profit, they trade at 160 times a share, $160 a share on 80 times earnings. But I'll tell you this, if the street ever said, oh, you know what, this conversion of GameStop to an online seller, they could make $2 a share in 2024, and they could make $4 a share in 2025, and they could make $6 a share in 2026. Would you pay 200 times earnings for 2026 estimates of $6 a share? It's $1,200 a share for GameStop. Those are just the numbers. Those are the multiples that people are throwing around. I'm just saying that's why people are still today paying 60 something bucks a share for GameStop when they were $10 a share 3 months ago. We know they went up to 400 in the meantime on a real technical wild run, but they're still at 60 something bucks a share. And people are thinking, yeah, I think in 2 years, even if they're trading at $2 a share, times 100 times earnings, it's a $200 company. 200 times earnings is a $400 stock. It's a 66. I'm going to buy the stock. I'm going to write options right now, bring income in. I'm going to wait this thing out. And every dollar I get in, I'm going to buy more of GameStop. I'm just going to keep buying GameStop. I don't care if it goes up, goes down. I'm just going to accumulate the stock. I'm going to keep buying and buying and buying. And by the time the shares get recommended by the Wall Street crowd, 6 months from now, 8 months from now, a year from now, 14 months from now, 18 months from now, whenever they want to come around, I'm in at a nice average price down here, wherever this down here is. And when it goes, I'm a winner. And I don't have to guess. I'm just going to systematically buy this stuff. That's what some people do. And you have to decide what it is you want to do. What can you handle? Psycho, and they're going to build semi-trucks. That's right. Tesla. They're going to do that. Wolfgang Robert Guerrilla Esquire has a YouTube, and I'm sure this week we will need new ways to keep financial regulators in check. 5 p.m. AZ weekdays. There you go. There's a plug right there. There's a plug. No charge. Well, $5 donation. Thank you. Thank you, everybody, for catching up with me today on this little Sunday hangout show. 1,040 of you have been joining us today. I'm looking forward to tomorrow. I'll be on the air tomorrow, 1 hour before the opening, for a 3-hour time frame, probably. And then I will likely be on tomorrow afternoon, 1 hour before the close until about an hour after the close. And we'll just see how things, come out. We'll follow the markets together, and you're welcome to join me and throw comments my way and let me know what your thoughts are, what you're following, what you're hearing out there, and we will follow the markets together and see where we go. I'll try to make it as plain, as simple as in plain English as I can for all of us, and we'll kind of follow it from there. 709 thumbs ups. Thank you for 709 thumbs ups. If it's possible for you to throw a thumbs up this way, I would love to hit 1,000 thumbs ups before I go off the air. That would really be great for the momentum of this show. Thank you, everybody, for following my channel and making donations to the PayPal account that I have, and these donations you're making. So appreciate it. Absolutely wonderful. We are going to hit 50,000 subscribers in the not too distant future for this channel. We are in the 49,000 something range here. Where we are right now, let's see. 49,561. So fantastic. 50,000 subs are just around the corner. This is awesome stuff. Thank you, everybody, for being part of the Stock Market with Bruce family. I very much appreciate it. All right. There you go, guys. Any more thoughts? I think that's going to be it for me today. I'm going to rest up for tomorrow morning and set my alarm clock for nice and early and get ready for pre-market activity, see what's going on. And we'll stay on top of where we're at, and we'll update you on what we hear, on what's going on. And I know you'll update me on what you hear is going on from your end, and we'll compare notes. Keep your eye on this channel for videos. I'm got a few in the works right now that I'm going to put together, and we'll keep you posted on the latest developments that are out there. The markets change every second of every day, and we'll see how it goes. Okay. Thank you so much for being here today. Stay warm, stay safe, stay healthy. Do what the doctor tells you. Don't get sick on me now. Wear those masks and social distance. And we'll catch you tomorrow morning. Come and join me an hour before the market opens. And we'll try and stay on top of any breaking stories right off the bat and stay through the opening and see what happens. And we'll have some fun tomorrow. Let's keep in mind, we'd love to do this right here. Oh, would we love to do that? Man, oh man, could I use this break? Let's hope we get to do this real soon again. That would be wonderful. Psycho, and they're going to build semi-trucks. That's right, buddy. That would be a lovely moment. I wouldn't mind doing this, though. Can't wait to get to the Big Apple again and hang out in Times Square, do some walking around and people watching and just enjoying the ambiance of the Big Apple. Man, I cannot wait for this. We'll see if we can do this sooner rather than later. Again, thank you, everybody, all of you, for being here. Have a great Sunday. Enjoy the Super Bowl, and we'll catch you tomorrow morning on the opening with Stock Markets with Bruce, your buddy, Uncle Bruce, trying to keep it simple in plain English. We'll take it from there. Okay, bye, everybody. We'll see you later.